Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Saturday, the 17th of May. Starting with the FTSE 100, which is broken out of a second bull flag. You can argue that we had one there, and the latest one through 86.50. Above that, not looking actually just for the 87.50 area, the late March resistance, but actually simply to the top of that rising trend channel shown in green from beginning of last year at 9,000 and looking for that by the end of next month. If it doesn't happen, still regard 8,500 as the worst that will hit and hoping that 8,600 now would be a pullback zone if the rug was pulled. As far as the RSI is concerned, it's at 64, so not even overbought after the rebound from 76.44, 75.44 that we had last month, and staying above the neutral 50 level since the last week of April, so very strong indeed. The DAX is next, and here the picture is that of a market that has been stretching towards new highs. Amazingly, it's actually already assumed or already cancelled out, obviously, the all of the tariff decline and is heading towards the top of that rising trend channel from April last year. 24,300, looking for that hopefully by the end of this month, while we remain above recent support, 23,300. Worst case at the moment, probably filling that gap to 22,800. Onto the Dow, which is the laggard, which is rather ironic given that it is the villain of the piece. The American situation, obviously, the reason that we've had all this shake up in the market. Currently, though, just trying to break that resistance line there from February. You could argue that we did it at 42,600 above that, looking for basically a return to the highs, so 45,000 by the end of next month. Best case here, maybe by the end of the summer, if all things work out, up to as high as 47,300, which is the top of that red rising trend channel in place since May. But if you are not quite so sure, then we've got initial support there, 42,000, and the 50-day line, hopefully the worst case scenario, 41,000 at the moment. RSI at 63, so not overbought, but the gaps higher that we've had recently, or the gap high we had recently, completing that bear trap island reversal, so move to new lows and then gapping up after that. On to Bitcoin, where we have a situation that the market's been able to consolidate above 100,000, which is great. We got initial support there, or second support there actually, at 98,000 initial support. The recent lows around 101,000. Hoping that this week will be the week when we actually break out of this second bull flag. The first one was an extended one, the second one, the one between 101 and 106, and through 106 looking for 120,000. We were previously looking for that to happen by the end of this month, but I suppose with a bit of a delay this week and last, then it could be delayed into the June period. Worst case at the moment, I suppose, is the area the 50 and 200-day lines around 92,000. But what is interesting is that we're about a week or two away only from a golden cross between the 50 and 200-day lines. So the run up to that tends to be the strongest part of the cycle. Moving on to gold, where I think lots of people think that this market is has done enough for the recent past, but actually we've had a bounce off the 50-day line, got a rising trend channel potentially from March, top of the channel towards 3,800, which we were actually looking for last month. We were looking for that to happen by the end of this month, but obviously had a double top through 3,400. But at least while we're above the 50-day line on the floor of the channel, 3,157, we're looking for a move into the upper 30s. If you're cautious, I suppose you'd wait for this market to break the line I'm just about to draw now, which would be through the 33.50 area. But really the level here is the 50-day line for any buys on dips. Moving on to the stocks and starting off with a rather bigger one that we normally look at. Very interesting to know what's happening with Burberry at the moment. We had an unfilled gap to the upside through a rising 200-day line, and I suppose the next time the 50 and 200-day lines meet, we'd have a golden cross. So this is the run up to a golden cross, and shares basically closing at the recent highs. The other point to note, I suppose, is with the cutting of jobs, 1,700 jobs going The company is sort of jettisoning costs, and that might be enough for the company to head towards the top of that rising trend channel from back in February as high as £14.20. Obviously, that seems like a mile away at the moment, but we do have a very strong charting setup here. And even if we stay above Thursday's low, £9.40, that would be a result and could be a platform for further gains through the 11, 12 and pounds area and beyond over the near term. I suppose £14 is achievable if we keep going by the end of next month. Moving on to the smaller company on Aquis as well. Here we've got BWA. We're from memory. I think there was some director buying. Current situation is that we've managed to go right back up to the highs of the year, and are looking for the shares to maybe head up to the best levels of the last 3 or 4 years, up to 0.7 pence by the end of next month. Ideally, they'll stay above the resistance on the way down around the 0.42 level on a mid-close basis. But obviously, this is Aquis. It's a very illiquid situation, and things could potentially spark anywhere, either on the upside or the downside. But it does look as though with those very strong candles that we've got over the last 3 sessions, this is a turnaround situation. Speaking of turnaround situations, we've got Coinsilium next, which raised some money during the week. And what was interesting about that is that normally companies that raise money, the shares go down. In this case, the shares bounced up very strongly indeed. The minimum target here now seen as being 5.5 pence, which has been promised for quite a long time. But that would compare very well with the fundraise 3 pence during the week. Above the 5.5 pence level, be looking for rather more significant gains, and maybe we can update on that at a later time. Moving on to CapEx, where it's been threatening to turn around for quite some time. Obviously, we had the dizzy heights last summer. Current situation is that we're heading towards the top of that broadening triangle there from back in November. That's just shy of 0.2 pence, and looking for that over the next week. We've broken through the 200-day line as well. You can see on the chart the next level up would be 0.25. See if we can do that by the end of this month. On to a stock which I hardly ever cover, but sounds like something from the Victorian era or Edwardian era, James Cropper. First target here up to £3, second target up to £4 at the top of the triangle there. £4 potentially on tap by the end of next month, especially if the both the 50 and 200-day lines start rising. The 200-day line not far from rising now. We'll start doing that this week. And upside valid here while we're above that 200-day line, around the 218 pence level. An unlikely winner in the recent past has been Cirata, and unlikely because obviously its recent history has not been great, but we've managed to hit the second target there. 35 pence above that, looking for 52 pence by the end of next month. Moving along to 80 Mile, where from memory again, which is slightly foggy at the moment, the company's made some money out of Metals One. But what's interesting now from a charting perspective is that above the top of that falling trend channel from back in September, at 0.28, we're looking for 0.35 by the end of next month, or even sooner. It looks very strong indeed at the moment. The next contender is Europa Oil and Gas, and here been, I suppose, rather dull in most of the recent past, but it does look like things are limbering up. Got a chance here while we're above the 50-day line, and especially while we're above the old November support there at 0.65 to hit the top of the range and the top of that triangle at 1.04 pence by the end of June. Don't normally look at this stock either, Gooch and Housego. Here you can see, though, that we've had a nice breakout, and I think if you look closely, we may have the 50 and 200-day lines now already both rising. That means we're looking for a golden cross and the run-up to a golden cross. And £6.11, perhaps, top of that triangle there to be delivered by the end of next month. Ideally, we could even stay above 471, the old March resistance, but it might be too much to ask for the shares to stay on the right side of £5 ahead of a move to the upside. On to Inspiration Healthcare, and here also looking quite encouraging. We've had a sort of sideways shuffle, rising trend channel base possibly looking at 33 pence by the end of next month if we remain above the 50-day line, which is now rising quite encouragingly near the lows. The rally here started with a non-fill gap to the upside, and that's remained unfilled. So this looks quite healthy and looks as though it might spike up as it has done periodically over the last year or so. On to Jubilee Metals, where we hope that finally we're looking at a situation where the shares will go up and stay up. The old floor there from back in January was 3.75 pence, 3.3 pence rather, and above that and the 50-day line at the same price, looking for the 200-day line. 4.3 pence by the end of next month or even sooner. This looks like a bull flag above a rising 50-day moving average, which is a signal, and also we've had a RSI rebound above neutral 50, which is another signal. So looking as though there might be some positive change there at Jubilee. On to Shearwater, I saw somebody tweeting very encouragingly, very, very encouraged by the latest share price move. So they should be, but we had an unfilled gap through the 50-day line last week, or the beginning of the month rather, and we've now held above or closed above the top of the recent range at 40 pence. Above that, looking for 50 pence initially, hopefully over coming days. Best case by the end of next month is at the top of the triangle there at 67 pence by that time. Finishing on with Tomco, which is, I suppose, disappointed on many occasions. We're hoping that this will not be one of them, but we do have the 50 and 200-day lines going into a golden cross, hopefully over the next week or two, or at least 2 weeks, and above the 50-day line there at 0.041, looking at the top of the range and the top of the channel at 0.09 by the end of next month. If that works, one will be quite joyous, especially given the way that we've had double bounce for the RSI at neutral 50, flagging a move to the upside. That's it for me today. More updates during the week.